So this is basically telling us sell your NVIDIA stocks and buy Cameco.
No, this is telling you that here you should have sold all your Cameco in 2014, buy NVIDIA. And until you go long NVIDIA, you go long Cameco once Cameco breaks above this line here. But right now, Cameco is in trouble here versus NVIDIA. It's in trouble. So right now, even if we like Cameco, when you see this, Cameco, yeah, it could probably bounce here, but it's in no man's land. This is if you're forced, this is the ratio chart. It answers this question. If I'm forcing you to hold either or, you have to hold one or the other. This answered the question. Right now, the bias is neutral bearish against Cameco, right? It's still NVIDIA, the top dog there, until this thing could maybe here could have a small outperformance. But if this thing breaks down here, it's that means NVIDIA is going to be outperforming Cameco. Look, they could both be going down. Let's say there's a market crash around the corner. Patrick, NVIDIA and Cameco could be going down the drain, and that ratio could still be going down. It's just that NVIDIA will be going down less fast, right?
Yeah.
So yeah, that's pretty interesting. Yeah, I did this chart a couple of days ago there in my workshop there. I did that. So that was interesting. So even Cameco is barely holding its ground. There's another way to see it. You could say that Cameco has went sideways versus NVIDIA since 2020 because it's back at the same ratio level, right? But that's another way to see this thing. But
here's the thing. Can't you make an argument? So it looks like you're on a log scale. So that kind of diminishes the visual in terms of the upside. So if you were to take off the log scale, you'll notice maybe a bigger drop. There you go. So it's like, wouldn't you say that CCJ would be a lot more undervalued looking at this chart here versus NVIDIA? Or are you just making an assertion based on the pattern that you're seeing?
Oh, look, that's why if ever you say, guy, put a chart up and you cannot do trend lines here while you know there's some action here, you're on the wrong scale. I'll tell you this. Somebody asked me this on the website. I'll give everybody. Patrick, when you choose log or linear, log works 100% of the time. Linear does not. Yep. Linear, when you see a chart like that, and you see here on the scale, I'm adding zeros. Here's a 1. Here's 10. As soon as you move in order of magnitude exponentially, you cannot put a linear chart on this thing. It doesn't make sense anymore because you can't do the TA on what's zoomed in. This, I've seen people do this, and I sometimes do it to express a point, to showcase that difference. But that's it's visual optics. It's a cheat to somebody who wants to bias an opinion. They'll put it on linear. Oh, look how cheap it is. Man, that thing could get cheaper for 10 years. That thing could flatline.
Yeah.
Who the hell knows?
How do you lose 99%? You lose 90%, then you lose another 90%.
Yes.
But when you lose the first 90%, the second 90% isn't as discernible on the chart because it's just like this small.
Yes, you're so smart. It's exactly that. So this thing, I've seen these charts all over the place. Oh, look, I know how they draw this. They do it like this, right?
Yeah. But
the only way to know that this has a higher probability chance of happening, you need to be able to do TA on this small part, remove drawings, and spot when the momentum actually changes. And this is the line that's going to tell you the momentum has changed direction. You have to put it on log scale. You have to. So always log scale. Linear only if you want to prove a point and you want to manipulate people, which I'm guilty of sometimes. I do it there on Twitter there with Bitcoin charts, but it's fine.
Well, I'm glad you mentioned Bitcoin. Let's get into Bitcoin if you don't mind. I've been watching this exchange between you and Max Kaiser. It's actually pretty entertaining. Yeah. And some of the stuff that I've read from him when it comes to entry points, that every entry point is a perfect entry point. Kind of explaining over why that's not really the case there, and how it could be potentially dangerous, especially for unbeknownst investors.
All right, let me just find his tweet. Look, sometimes I try not to react because I follow a lot of people. I follow a whole range of people. Look, if you see the people I follow, there's some gold guys, silver guys, there's macro guys, there's a whole bunch of guys. There's like random stuff. But I also have a lot of crypto stuff in there because I want to keep, I want to see what's happening. And a lot of the stuff is cringe. It's like, sometimes I want to reply to a whole bunch of the stuff that's nonsense, that it's just clickbait. They're playing that marketing thing to prop up the emotions of people, to bet the house. It could only go up. It's 100% sure. Yeah. And I'm sure Max knows nothing is 100% sure. Even if he says it, he's been there in the business a long time. There's the wheat stocks. I could have showed you, Patrick, you can't compare it to Canopy. Remember, like, I just need to preface, there's tons of examples. Look at that. It's doing a full circle, for crying out loud.
That kind of looks similar to the Bitcoin chart.
Yeah, it's exactly the same.
Like
look, I'll show you. It just, Bitcoin didn't go down there, but
yeah, Bitcoin hasn't fully arched yet, but it looks like it did arch when you look at it from a log scale.
Yeah, I'll put log here. So essentially, the top here, the higher high here, Bitcoin did. That's what Canopy Growth did, higher high here. And then it did an echo bubble up here, and then it just failed. So I don't know how high this move here. Let's say Bitcoin goes up to, let's say it goes up to 50,000, another thing like that. Then that roadmap as set up by the Canopy Growth chart is still in the cards, right? So there's roadmaps. There's so many roadmaps. It's like when you play poker. There's so many, you get dealt those two cards, but after that, you don't know what's going to go on the flop, on the river, right, on the turn. And that's what chart is. You adapt along the way as the price morphs. And I'll just try to find that Max, look. I don't know, man. There's nothing, and people confuse my charts. These show me, I put a Bitcoin chart out. It's not necessarily bearish, but it's not bullish. People get angry because I'm not saying it's going up. I'm saying, guys, I'm just saying, look, I'll show you this one for the Max thing.
It goes back to your point. What's your time horizon, right?
Yes.
You could have two people just talking over each other, like you just said, but you're talking about a different time horizon that they are. Maybe in 10 years, it could be that they're looking at it from a 10-year time horizon, or they're thinking that you're looking at it from a 10-year time horizon, when you might be referring to something a little bit more near term.
Well, I can't find, let me try to find that bit. But there's time horizon, but you could have time horizons, but it doesn't mean it's 100% sure it's going to keep going up, because you see that wheat chart or whoever, there's a whole bunch of companies that just went down, right? Or I think, I don't know if we mentioned it today there, or I think it was before we started recording. The SPX, yes, over long periods of time, 100 years, bottom left to top right, but the SPX is able to rotate out the least performing companies. It's an index, the 500 top companies. So the poor, of course, is going to be skewed upwards. It's going to get rid of the bad stuff, and it's going to keep the companies that are performing. Bitcoin can't rotate itself out. What is it going to rotate if people don't want Bitcoin anymore, or the money flows aren't going in there anymore, which right now is a low probability. Right now, it's been tracking US equities. So there's no reason to think that Bitcoin is going to go to zero. It just doesn't make sense, right? It could go sideways, underperform inflation. It could stagnate for 5-6 years, whatever, and then go up. But it cannot rotate itself out. It does not have that edge that the SPX has. So while it is tracking the SPX or NASDAQ and all the other tech stocks, it doesn't have the edge that the SPX has. So Max, where the hell is the? Sorry, guys, I'm trying to find it.
Essentially, what Max said is that TA doesn't work, or TA doesn't matter, and any entry point is a good entry point in Bitcoin, which is
okay. I'll show you. I'll show you why that's wrong. I'll show you what but I understand. I'm sure if I would talk to him, he would say, "Well, Patrick, you've held Bitcoin for 4 years. Of course, like everybody's been made whole." But I'm telling you something. What if it doesn't? Doesn't go back to all-time highs. What if?
Sometimes it's easier said than done, though, because some people need access to capital. It's because like holding on to something for 4 years. It might be feasible for people like you and I, but barring some unforeseen event or emergency, you may need to tap into that capital. You may have to sell at a loss potentially.
That's right. So, look, it's not even that chart. I don't even know. It's so weird there. because as soon as he started using childish baby names on me, I just said, okay, that I'm done there. But it's irresponsible to talk in absolutes. And I come from a scientific background where it's about probabilities. It's not always going to work out. It's not always going to be buy at $1 and it ends up going to $20,000 or $30,000. It's not always going to be that. Professionals will tell you that. When you shoot the three-pointer, it's not always going to go in. It's going to hit the rim. It's going to fall down. Or like you said, even if it starts going up, like I told you there, Bitcoin, I was back in there at €5. And then what do you do when it gets $1,000? It went up 200 times. You're going to take profits. You're going to you're going to take profits, and you're going to need money to you have a new kid. You want to buy a new house. You're going to cash it in. So always using the carrot and saying, look, I did the best performing asset. I did 10,000 or 100,000%. It's kind of disingenuous because in real life, that's not going to play out like that, right? We all have different emotional profiles. It goes up to $1,000, then it crashes 70%. Of course, you're going to sell there. You're going to panic, right? You're going to say, oh my goodness, man, I have to lock in profits before it goes down to zero. Then it goes back up. Then you buy at the top. Then it goes back down because somebody told you that you could buy at any good moment. Well, a chart like that. Okay, I'll talk about this one. This one I did in February of 2021. That thing had a white candle. It was rocking upwards. So I had to do a bearish chart while everybody, the laser eyes, were running amok. So this is really tough because people, what are you doing, Patrick? Calling a top or whatever. But it was getting, well, it's super fun that we covered. This is the distance from the 12-month moving average. And you see, I had to go on the 12-month for Bitcoin because it moves fast. And I was looking at the previous bubble. I see, look, I put on linear scale to cheat the audience. I did it here to show how more vertical than it really is, right?
Mm-hmm.
But then I saw there's not much distance from moving average it could go before running out of steam. And what happened? You do a little bit of math. I did 222%, and then above whatever the 12-month moving average was there. And after that, you could extrapolate. Here's another picture I did a little later. Look where it stalled. Exactly where above the moving average. So what was Max saying back then? What were the crypto guys saying back then? I'm sure there's a few that says guys were getting stretched, but most of them, that's when their accounts were blowing up. That's when they were getting sponsorship deals. That's when the whole thing went bonkers, right? Grayscale, the Bitcoin ads, drop gold, all that stuff was happening back then. But when you look at the charts, it was profit taking time. So all the people that got trapped here, and that's the way I phrased it, a lot of people are going to get trapped above 58 and 64K. That's exactly what happened. So saying that buying at any time is a good move, even if it does recuperate, it still wasn't a good move. It still was not a good move. Is a high probability, low risk, high reward setup. That's a good move. But going all in with 7-2 deep in the round and doubling down because you're trying to bluff your way out of a pot and then you're trapped, that is the bad move. Because like we said, professionals over long periods of time, that kind of behavior is gonna wreck you. It's gonna destroy your capital. You're gonna give up on trading, and it's just gonna be sad. Ruin marriages, ruin families. Like, it's not. I wish that for nobody. So that's where my beef is: talking in absolutes, giving price objectives and time to reach them, where it's practically impossible to reach them. When he gave the target there, it said 220,000 by July of this year. And I drew an angle on the chart. It was practically impossible for it to reach that target in that time. He didn't even look at the chart.
This was back in 2021, right?
No, not this one. Back in, he did his interview on the Daniel Camboni show.
He actually said back in 2021 that Bitcoin would reach 200K by the end of that year too.
Yes, but look, I don't. That's his older calls. I know people. Oh, Mike, you've been saying that for forever. Look, I'm not even going to talk about those calls, like whatever. But he did that call like 8 months ago for this July. So that means, I don't know, 5 months ago or early this year in December, he did that. And then just mathematically, it made no sense. Even in its strongest bull runs that Bitcoin had when it was exponentially exploding back in 2009, 10, whenever it was going really bonkers, even that couldn't reproduce that target in that time. You looked zero at charts. And that's where I could have helped, because I could have said, look, It's mathematically, statistically impossible for it to do what you're predicting. It's a low. Somebody could have bet with him $100,000. I even thought about it, but I said, oh man, I'm not going that. Like it just to show that it was just a low probability occurrence of that thing happening. So, but people don't look at the chart, didn't look at the probabilities. He said 100%, the price would fix itself. How many people lost money on that?
Yeah.
It's dangerous. It's reckless. He has a big following, and that's primarily like my beef. I don't say I'm right all the time, right? I'm saying that there is a way to minimize the risks and just be safe about it. Use proper risk and money management. Get those low risk, high reward entries. If they don't work out, you bail and you try another one.
Yeah.
You can't go for the moonshot every single time.
Yeah, and I just want to make it clear to the audience, like we're not just here shitting on Bitcoin because we hate Bitcoin. I actually agree with a lot of the concept of Bitcoin. I actually made a 5-bagger out of Bitcoin back in 2020 and 2021. So that was actually a profitable trade for me. But the difference is you've got to know when to pull the trigger to get out as well. Sometimes you've also got to take into account opportunity costs too. You can't just lose time holding an asset for another 4 years for another halving period to see another move up.
If it go, look, this is it, guys.
Yeah, true.
If it goes up, people have a hard time. If repeat that, guys, after me. Do you know what's going to happen tomorrow? Most of the time we think it's going to happen, but you have surprises in life. You get injured, you fall off a tree, something happens. Guys, it's a lot of random stuff. So the further you look out, the more murky it is, right? But the closer it gets, then your vision gets better, guys.
Yeah, you can't just move the slider over to the right and just extrapolate.
No, I've done that.
Yeah,
I had fun with those tools where I copy pasted what happened in the 70s to silver, and I
fractals.
I put it today. Hey guys, look, silver at $10,000. But hold on, it's fun. Look, it's a roadmap, but you have to attach a probability to it. Right now, at this stage, repeating a 10 or 100 bagger, it's a low probability event. We have to, like that first chart that we talked about, we have to start by breaking out, and then the probabilities increase along the way. But just to tell people, just to hold and be bag holders, it's unnecessary pain, emotional, because every day it goes sideways while you're seeing NVIDIA going up. That hurts.
Yeah.
So when it comes to investing in public companies, what I like to think of is, and this is going to sound a little bit tough for some people, and I'm sorry if this offends anybody, but really when you're buying into a junior mining company, you have to look at different groups of people, almost like different classes, and you're looking at concentric circles that expand.
Yeah.
So the people in the middle of a circle, they're the ones that bought stock at like 2 cents or a small percentage of a cent. That's real, okay? People set up businesses and companies that are public for almost no money, and they own a lot of stock, and they can dump it on your head. So those are the ones who make money no matter what, because sometimes they can dump the whole lot at 1 cent and still make 10 times their money. Beware of, situations like that. So the people in the center who set up the businesses, a lot of them, they hold less than 10% of the company. So you don't even know who the hell they are, and they can be selling and buying, and you won't be notified. They win pretty much every time. So that's the center. But then there's, the outer people, the management team, the people who bought stock at 2 to 5 to 10 cents, people who got in really early. It's usually somewhat of a network of people who are, in Vancouver, in the know, service providers to those companies, etc. Sometimes it's people who just saw the idea or the opportunity early enough that they bought it at a discount. Great. But then there's sometimes when the story gets big enough and solid enough, there's some institutions. Sometimes before that, there's just savvy investors that get in early on the story. And then you have, retail investors that have been in that commodity for a while and just heard of the company. And then generalist investors, and then latecomers who are Googling how to invest in this kind of stock. And so like with each level that you're going farther and farther, the group of people is usually bigger, but you have to have a story that will carry on to the next group of people. So when I buy a stock, I'm like, okay, who's going to buy this? And what are they looking for? And if I can't answer that, then the opportunity kind of isn't there for me. So you always have to ask yourself, if you're buying this right now, you will have to eventually, unfortunately, sell this, probably at a profit, right? Hopefully at a profit. And in doing so, who are you going to have to sell your stock to? Now, it's dangerous for me to say that because I promote stocks, and people think that I'm a good enough trader that I can talk about a stock and then see it rise and then sell it and dump it on their heads. No, I don't usually trade enough size to even like move much of the stocks that I promote, and I can't, just obvious ethical move, like I can't do that. And also I wouldn't be able to do it because I can never nail the top anyway, so like forget about it. But the thing is,
we'll just do the
you have
opposite
to
of
think
what you
about
do
it.
then, Fabi.
There you go. There you
No.
go. But, and this is what we have to start thinking. People who are in any sort of story, you have to talk your book, you have to go out there, you have to do what you're doing now, promoting, this opportunity, because we need to grow the pie of junior mining investing, because who's going to buy, stocks that we're buying at a cheap discount? Montage Gold is super cheap at its current price, but it's still going to be super cheap if they can manage to, double the price without diluting. It's still going to be super cheap. And so other people need to understand that it's cheap. And so it's always good to be talking about the stuff that you're into and telling people the story and why you think it's going to go somewhere.
Yeah. So would you say, do you ever use like any sort of technical analysis, or you just stick with the fundamentals in terms of your decision making with these public companies, of course?
Yeah, no, I don't usually use technical analysis. I should probably, because knowing what to buy doesn't mean that you know when to buy it. I think it would improve, my returns. But I do really like to buy companies when the technical analysis side of it looks absolutely crap. So when it looks like the patient is dead and it's flatlining, that's when I like to buy it, especially because I was lucky enough to experience that when I bought Encore Energy before it did, different splits and consolidation, things like that. I bought it at, 6.5 cents. And that was a 20 bagger for me. And I remember distinctively looking at the chart, and it had gone down for so long, and you could tell like nobody cared anymore, but nobody was selling and nobody was buying. It was just like bumping along the bottom. And I think that any, technical analyst worth their salt wouldn't have bought at those prices and would have said, wait for a breakout, like this is not it yet. The thing with me personally is that I found that when a stock breaks out, I usually wait too long, and then I chase, and then I second guess myself, and then I'm like buying, selling, and I'm trading the stock instead of trying to actually hold it. So because of my own deficiency, I prefer to buy stuff that looks like it's, pretty dead. And then I just wait because, like one of my edges is I like to do nothing. If I believe in the company, if I like the team, if I trust that the story is going to get better, then I'd rather, buy the stuff that looks like crap on a chart and just hold it.
Yeah. I want to actually kind of focus in on that. What would you say is your edge in investing, aside from being patient? Is there anything else that you'd say?
I think being patient is most of it.
Okay.
And I don't know if you need much more than that. They say that, and there have been studies that have shown this. I can't quote from where, but it's somewhat of this, legend in the investing world, where they compared the people who made the most money and the people who keep losing money, and the ones who outperformed the market were all dead because they couldn't trade stock. I believe that. I think to a certain extent, what we're living nowadays in the mining industry might be a little bit different. If we keep on growing the amount of companies that we have in this market and not getting enough people to invest in it, I think that's going to be somewhat problematic. But it's a cyclical market. Whenever things look like crap and feel like crap, and when you think that this will never get better, it's never going to go back to the good old days, then something could happen like what happened in the end of 2015. So in 2015, I think it was December, I was buying a little bit of stock here and there, gold, silver companies. I think I bought some uranium companies as well. And then in 2016, we had a pretty violent and quick, bump where stocks just, did triple and more in, I think, a span of 6 months. So like if you miss it, if you're humming and hawing and trying to do, deep due diligence on companies and you miss that, then you might actually miss the whole move.
Yeah. Yeah. And to your point, having patience is an edge, especially in today's world. I mean, look at it here. This is average US equity holding period. And this tracks it across all the way back from 1975. So 1975, the average was 5 years. Today, 10 months.
I think 10 months is high.
Yeah, it's probably a little high. But it's
I think it's going to
really
keep
cool
coming down. I mean, our and all of the following generations that came after us, like we have no patience for anything.
Oh yeah, it'll get worse the more the older the millennials and Zoomers get, and I hate to say it, when more boomers die off, because they're really kind of like the bedrock of society at the moment. But when the likes of us take over, I mean, goodness gracious, it's not going to be a pretty sight.
No. That's why there's Robinhood.
Yeah,
right?
There you go.
Few clicks and you got your stock.
Yeah, I totally agree. Well, hey, thank you so much for coming on, Fabi. This has been a fantastic interview. I really enjoyed it. It's been my pleasure as well. Tell the audience where they can find you.
Sure. They can look for The Next Big Rush on Twitter or LinkedIn or the website, thenextbigrush.com, and YouTube as well.
Yeah, so we'll have that linked in the description down below. So be sure to check out The Next Big Rush, and also follow Fabi on X. We'll have that link as well. Fabi, is there anything else you want to leave the audience with before we sign off?
Yes. Just one quick thought. It is always darkest before sunlight. Don't forget.